So let's talk about stop losses. If you have been investing for maybe a week, a month, or even a couple of years, you have probably heard of a risk management tool called stop loss. And in this video, I'm going to talk about what it is, the purpose, the advantages, disadvantages, and the number one reason why I don't use a stop loss. So let's get started. So 96.4% of you haven't subscribed yet. It is free, and you can always change your mind in the future. And this month, I'm looking to help 20 professionals without a financial background to master investing and target 30% a year. So there will be more details at the end of the video. So what is a stop loss? Stop loss is a protective measure you put for yourself so that if the stock drops to a certain price, the market will take you out immediately. Imagine you entered a stock at $100. You set a stop loss at 90. And if the stock price goes down below 90, then your broker will automatically sell it for you. That's quite convenient, right? Because now you know the maximum loss you will incur is $90 most of the time. Now the purpose is really to protect yourself from further stock drop, and if there's any surprises that is out of your expectation. Most of the time you'll hear people use stop loss are day traders, and that's because they have clearly defined their risk to reward ratio, which is going to be a separate video in this case, and stop loss is the way they control their risk to make sure that they don't lose more than the agreed amount, because day traders often use leverage. Now the advantage of stop loss is very clear. If you set it to exit at 90, most of the time you're going to be able to exit at 90 unless the stock suddenly gaps down or jumps down because of a large sell order. When you enter into your trade, you'll know exactly how much you'll lose. And to some people, this will give them peace of mind. It will make them sleep better at night. But there are also disadvantages for stop loss as well. Now the first disadvantage, which is crucial, is that even if the stock goes down to $90 for 1 second, you will get stopped out. You will often see this in the market where the stock price goes down to, let's say, $90 for a couple of seconds, comes back up, and you just got what they call whipsawed. In the market, it is quite volatile, so you'll see these cases happening all the time. The second disadvantage is that when you send your stop loss to the broker knows your stop loss. Now, most of the time, this seems like it's okay because obviously the broker needs to execute the stop loss for you. But what if your broker sells that data to different hedge funds? And that's where it brings me to an interesting case study today, which is Melvin Capital, GameStop, and Robinhood. When you're looking at the platform for Robinhood, it is a free platform that you can put your money in and you can trade the market. Now, there's no transaction cost to Robinhood, so you might be wondering, well, how does Robinhood make money? And it's very important to keep this in mind because when you don't pay for a service, you are part of the service. Robinhood gathers thousands and millions of traders' data and they package it and sell it to hedge funds. And one of the hedge funds that have access to this data is Melvin Capital. So you can imagine different hedge funds can see exactly where you place your stop loss. What are they going to do? They are going to be like, well, hey, let's look at this Eric guy. He's going to sell Google at $90 for 100 shares. And I want to get 100 shares at $90 from Eric. So I'm going to short the stock so then it goes down to this $90 level and take the shares from Eric. And then I'm going to buy back the stock so then it goes up again. And you can imagine how powerful this information is. You can see thousands of traders placing their stop loss and you know exactly where to hit to grab their shares before the stock skyrockets. And that is really an information advantage that the hedge fund have and you don't. This is the number one reason why I don't use a stop loss when it comes to investing. So when it comes to investing, my vision for myself is to get 30% a year. And for the last 5 years, I'm very happy that I'm able to meet and exceed this goal of making 30% a year. So if you want to be making 30% as well, then here is a health check for you. These are 9 questions for you to answer to become a successful investor. If you are able to answer all 9 questions, then you'll be on your way to making a higher return. So first, what is your stock selection process? What is your risk management process? What is your portfolio management process? And entering, exiting, and multiplying your profit? And what's your strategy to deal with market crash? And what's your strategy to reduce your capital gain taxes when you make money? So if you want me to take a look at your strategy, then you can email me your response at eric@5minuteinvesting.com, and I'll take a look at your strategy to see if there's any room for improvement, and we might even hop on a call to have a discussion. So if you want to know how I answered these 9 questions, then you can get my free 4-hour training in the description below. And this is perfect for you if you are a full-time professional with no financial background and you want to learn how to manage your own portfolio with confidence. And you'll learn how I got 30% for the last 5 years. And the link is 5minuteinvesting.com/free case study. So in Investing Accelerator, I just want to celebrate another 3 case studies where Lisa made 88.39% from Alteryx in 1 month, Carolyn made 72% from Alteryx in 2 months, and Bruno made 39% from Play in 84 days. So congratulations to you all. And one of my favorite things about this case study is that Carolyn is one of the first few students. and she started 2 years ago, and her dream is to double her account every 2 years. Now, this is a very lofty goal. She doesn't do too many trades because she holds longer than other people, and she bought Outrix very early in August and September last year, and only hold till this morning with a 72% profit. And her account is almost now doubled at 96.6%. So I'm very happy for Carolyn. Congratulations. And it's about building wealth for many, many years to come. So this month, I'm looking to help another 20 professionals without a financial background to master investing and target 30% a year. So if you want to be one of the 20, then you can watch the free case study in the description below and then schedule a call with me. Now, in terms of the giveaway, this month, I'm giving away the one thing, the surprisingly simple truth behind extraordinary results by Gary Keller. So if we reach 100 likes for this video, then I'll select a winner in the comment section. So make sure you tap the like button and leave an interesting comment below. I'll see you in the next video.